The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time, Tuesday morning. We got a little bit of retail sales week numbers versus the expectation the market was looking for. Markets this morning, pretty much flat. S&P's right now negative by 2. NASDAQ 100, we're positive by 6 right now. You get the Dow, negative by 42 points. The Russell, negative by 6. Some lofty numbers, man. How about this S&P? 55.43. You talk about a pop. Let me back that up to a 15-minute. You roll over on futures from Sunday night into Monday. Hope everyone had a great Father's Day out there this weekend. And then yesterday, you surge higher. You talk about an acceleration, man. You start off the day under 5,500. We ended at 5,561. How about the NASDAQ 100, man? 20,271 last night was the high. We're trading just under that price level, 20,195. You see a little bit of volatility on that retail sales number, right? We spike initially. You trade a little bit lower. The Dow, 39,300 was the high overnight. Again, you see the volatility on the 830 number as high as 39,280. We give up about 85 points from that high, 39,195 in the Russell. Volatility as well, Russell trading 2,039. Bitcoin, a little bit of lower action. Look at the move we had in Bitcoin overnight, man. From 67.5 yesterday to 64.7 last night. We're coming into those lows right now, 64,985 for the price of Bitcoin. Crude, holding pretty well at $80. We hit a high at $80.01. We're just under that price level at $79.75 this morning. You talk about an acceleration yesterday, more than $2 from lows to highs on yesterday on that acceleration to higher price. Pretty remarkable. The prices at the pump, I'll tell you. I'm seeing like $3.09 everywhere around me. I get my gas at Sam's, which is Walmart, of course, and $3.01 was the price tag yesterday for 87 unleaded, even for 93 high octane. I think it was $3.74. Remarkable low gas prices right now across the board when you consider inflation, et cetera, going on. Gold contract. Volatility everywhere in gold as well. Now, we got some action in rates this morning because of the retail sales. We'll get over to that in a moment. We got a little bit of lower yield. There's the possibility of a slowing economy, going to give the Fed the ability to get some cuts in there. Nonetheless, you have some volatility on gold. We're trading at $23.33 right now, positive by $4 on the session. Silver, down about 5 pennies at $29.32, and we jumped into notes and bonds. Higher price, lower yield, there is the reaction to the retail sales. You spike from about 110.10 to 110.21, so we're up about 11 ticks right now from where we were coming into that retail sales number. You got a 10-year yield right now. We're chopping around right near about 4.25%, 4.244 to be exact. So rounding would be 4.24. Call it 4.25%. As we got lower yields coming at you, Treasury yields retreating. As we have weak retail sales. And, how's that consumer doing? Well, we're going to find out, man, as time marches on. VIX sitting at 12.69. All things considered, very, very little volatility premium in this market right now. All right, let's jump to those numbers. Retail sales barely increase in a sign of consumer strain is how Bloomberg puts it. So the value of purchases rose 0.1% in May. And this is after we got a couple of downward revisions in the prior months. Households have costlier debt. Delinquencies continue to rise. Not exactly indicative of a strong economy. The Fed thinking, is it time? Is it time? Maybe it's time to at least get one cut in there, right? The one thing I find myself constantly thinking is it's probably time to get a cut or two in there. Because the risk is that we are in a restrictive rate right now. You're at 5.25 to 5.5% is the range. The R star, the natural great rate of growth in this economy, is not above 5% right now. You can make a very real case that, we're still dealing with inflation between 3 to 4%. Very real. But if the Fed brings their rate down to 4.75, it's still in a pretty decently restrictive policy rate. Okay, so that's the verbiage that you may see start to come out of the Fed in the next couple months if this data keeps up. Retail sales barely rose in May, and prior months were revised lower, pointing to greater financial strain. The value of retail sales, unadjusted for inflation. So we know we have inflation still, okay? So even when you don't adjust for inflation, it's increased 0.1%, which means that the consumerism is not really rising when you think about the fact that inflation persists, and when you don't adjust for inflation, retail sales are barely rising. After a downwardly revised 0.2% drop in the prior month, the data showed Tuesday, excluding gasoline though, sales rose 0.3%. So that's the kicker in here, okay? Because gas is cheaper, gas goes into that number on the retail sales headline number, okay? There's always like something in here for everybody. Retail sales month over month, there's the headline we've been talking about, rise 0.1%, unadjusted for inflation. The estimate was 0.3. If you take out autos and gas, you're up 0.1. The estimate was 0.4. If you take out just gas, sales rose 0.3%, okay? And then the control group went up 0.4%. And the control group is, I have it down here. Where is it? Right here. It excludes food services, auto dealers, building material stores, and gas. So if you take out all of those, the control group, which is what is used to calculate GDP, okay, up 0.4% still. But nonetheless, I think some of these numbers we keep disappointing, were lower than the expectations, right? The numbers that we've been dealing with. Yeah, service spending at restaurants and bars, the only service sector category on Tuesday's report, declined 0.4%, the most since January. What's up? No one's going to restaurants and bars these days in the month of May? What's going on? But interesting when you look at it, right? These are May numbers, most since January. That's only a 4-month gap, okay? But it was a decline of 0.4%, and that's the only service sector category in that retail sales report that we just got. So the market takes that, and we got a little bit of negative crisis. As you now have the NASDAQ, I mean, we came into that number about 50 points higher. We're trading at 20,192. And what's a little bit dicey here, and I've been talking about it, okay? This market does not want a weakening economy that's going to give the Fed the ability to cut. It doesn't want it, man. This market can handle 4.25 to 4.5% 10 years right now, because the economy is on fire, right? AI is driving a new bull market, driving multiples to levels that are getting a little lofty. I mean, look at this NASDAQ, man. The NASDAQ just doubled in price from the lows that we had at the beginning of 2023. Can you believe that? We're up 100%. I mean, that's remarkable, to put it lightly. And what is interesting here, okay, is that, and I'm going to look at NVIDIA for a second. We're coming into the break. We'll look at it again. NVIDIA is above now the A to B, C to D, and this is just where we began this year at, okay? That's not starting. NVIDIA is going from a tenfold banger when the market's doubled. NVIDIA is going from 13 at the beginning of 2023 to 130 now, but we're just going to take a look at the A to B, C to D that it started this year. Stay tuned, folks. We got a lot to talk about. Be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This portion of the morning market kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We get the markets. We go green over the break there. S&P's positive by 1. NASDAQ positive by 15. NASDAQ 100. NQs, that is. And you have the Dow now positive by 1 as well. You know, it is pretty remarkable when you take a look at this NASDAQ, right? So I always use this scenario just to bring people into kind of a remembrance of where we were at a certain time. When Trump got elected, folks, that was November of 2016. And everything was really good in the economy, and it kept going good. But I bring that up because I think we can all agree, because you can't agree on a lot in politics, that there was the debate whether at the time things were going well for Trump because he got handed an economy that was already doing well, because we ran from the lows of 2008. I mean, I'm just taking the NQs of 1,000. Look at this, man, right? You hold the NQs for 16 years and you got a 20 bagger. Phew. But I'm not cherry picking the lows, okay? The debate was, man, well, it's not fair because we just went from 1,000 to 5,000. The economy was already on a great track, and then it continued to do well for Trump, and he took the credit, okay? I'm just bringing it back to give you the idea that the economy was on fire already in 2016. Everybody loved where the market was at that time, and you had the NASDAQ 100 sitting under 5,000, and you had the S&Ps sitting, let me find it. Let's zoom it in. Is that the volatility? Yeah, there's the volatility. There's your November volatility bar for the election. The S&Ps are 2,200. Okay, so the NASDAQ 100 was at 5,000. S&Ps were at 2,200. I just remind you, because yes, it's 8 years later, okay? But man, this has been a rocket ship. We got a little bit of a weakening economy right now. The market is okay with where rates are, but they're still highly restrictive. And, you got commercial real estate out there that could be a little bit of a ticking time bomb when those properties end up having to go for refinancing. And then what happens? They might hand in the keys, and then the banks have to actually mark them to market. My dad was making some great points this weekend talking about that. Of course, we talk a little business always, talking some business over Father's Day. So keep that in mind, because you're going to think, we've been waiting for cuts for a while, that it's intuitive to think that, man, finally we're going to get some cuts. The market's going to love it. But the reason why we're going to get cuts is because of a weakening economy. And if that's the case, the markets are going to get a little skittish at these lofty levels, man. So keep that in mind. I mean, look at some of these numbers, right? You cherry pick the COVID lows, even if we ballpark it, 2,500 up to almost 5,000. That's a 2,500 point A to B leg. You could say that your C point would be 3,500, and you run all the way up to almost 6,000 would be the mark, depending on when you take that. I mean, we've almost completed an A to B, C to D formation on a longer basis. On a shorter term basis, if you take your A point at the lows of October of 2022, that's about 3,500 as well. The B point's 4,750, that's 1,250. You take the C point, 4,250 just below, that puts you about 5,500. There's your A to B, C to D formation. It's almost right there. There are A to B, C to Ds completing all over the place now. I use that as a segue to NVIDIA. You talk about a chart, man. NVIDIA, where was NVIDIA in 2016? There you go. $166. 238 was the high. How about it, right? Getting back to a monthly. Now let's put it on a daily. We zoom in on this A to B, C to D. So this is taking, I'm going to put it on a weekly to make things a little clearer. Your A point here, and you know what happens is this erroneous tick high, 195, not real, okay? Your A point is the beginning of 2024. This year, folks, okay? $47, you rise up to 97. The A to B leg is exactly $50.08. Your C point's exactly 75.61. To the penny, that brings you to about 125.69. And where are we trading? $5 above that price point. So you're talking about an A to B leg. I mean, can you imagine if in March, when this equity had already doubled in price, okay, you went from 47 to 97, and you got a little bit of a pullback. People said, don't worry, that's just your A to B leg. And where did you get a pullback to? You got a pullback. Yeah, I can't. This erroneous tick, unfortunately. Can I scroll down there? No. It's a 382 pullback, folks, okay? This line right here is a 382 pullback, almost perfect. And I bring that up because what's so interesting is, okay, the market's very weighted towards NVIDIA. We have NVIDIA now at 3.2, where are we at? 3.23 trillion, I think. Come on, load up for me. Here we go. Yeah, 3.23, if you round up. $3.23 trillion market cap. Now, Apple's been on a run recently, man. So they're going to be above that now. 3.33, but barely, okay? And Microsoft is sitting right near those levels as well at 3.33. So look at it. Microsoft, 3.33. Apple, 3.33. NVIDIA, 3.23. Just bonkers, man. Those three equities alone, $10 trillion, right? Whew. You talk about it. Now, when we talk tech, okay? Check this out. So you have the XLK, which is the Technology Select Sector Spider Fund, okay? We have a rebalancing going on. NVIDIA's blistering rally is going to force a major technology exchange-traded fund, the XLK, to acquire more than $10 billion worth of shares of the chip giant while cutting dramatically back on Apple. Pretty interesting. Could this be one final thrust? I'm not sure. But it is interesting when you start seeing these types of accelerations, right? Momentum is a killer on the way up, and it's a killer on the way down, though. So that's what you want to be careful of, right? The index, XLK, will soon rebalance based on adjusted market cap value from Friday's close. The new calculation shows Microsoft as the top stock in the index, followed by NVIDIA, then Apple. Now, it's interesting because I just went over it. Apple is still above it. I don't know how that changed on Friday. Maybe you have a little bit of a pop there. Nonetheless, Apple, it's understandable. They're not getting the pop that these other equities are because Apple is only, about 10% above where it was at a year ago, right? And if you even look at where it was in the beginning of 2022, you hit 182. So what do we have, 20% from where we were in the last 2.5 years? So you can see that they're waiting over that time. Not as big of a deal. All three stocks would have a weight above 20% in the index if there were no caps in place, but diversification rules for the index limit how big the cumulative weight of stocks with at least 5% share can be. As a result, Microsoft and NVIDIA will have a weight of around 21%, while Apple will fall sharply to about 4.5%. How does that make sense? So be careful on this XLK. We're going to finish this up. There's not a lot of people who know this, right? If you're buying the XLK, you probably think you're getting a diversified balance of these tech equities. And meanwhile, I just went over the market caps. They're basically all identical. And if you buy the XLK, they don't have to get Microsoft and NVIDIA.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry Pesavento on Friday, June 14th and Friday, June 28th this month for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryJune24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open. S&P is positive by 2 right now. NASDAQ on 100. We slip into the negative by 3 points. Dow positive by 36. The Russell is flat right now. We jump over to crude, up about 15 pennies to 79.87. The gold contract up about $5 at 23.33. We check in on notes and bonds on that retail sales number. A little bit of higher price, lower yield with the 10-year up almost 7 ticks to 110.19. As I mentioned, we're dealing with a 10-year yield of about 4.25% right now. We jump over the dollar. The dollar, a little bit of weakness at 105.33 right now as you have slipping yields. So what's going to happen? Yields, higher price, lower yield. With a lower yield, we have a weaker dollar. We have gold up a little bit on that news as well. And yeah, jumping back to NVIDIA. So NVIDIA shares slightly in the red with the NASDAQ 100. You're still trading at almost 131 for NVIDIA shares. You jump over to Apple. So these were as of Friday's close, right, that they use these market cap numbers. And what's interesting is, so NVIDIA and Microsoft had a bigger market cap than Apple as of Friday. And then you had Apple trade decently higher yesterday. Meanwhile, yeah, Microsoft really did too. But NVIDIA actually dipped yesterday, which is why Apple actually got back above them. Nonetheless, take a look at this. So, again, because of diversification rules, okay, the rules for the index limit how big the cumulative weight of stocks with at least a 5% share of the fund can be. As a result, you're going to have Microsoft and NVIDIA with 21%, and Apple's going to drop to 4.5%. But coming into this, it was the other way around. Microsoft and Apple were at 22%, and NVIDIA was at 6%. So NVIDIA is getting a 15% pop into those numbers there. And that is about $10 billion in buying. The XLK has $71 billion in assets. A 15 percentage point change in the fund equates to more than $10 billion is what they have to do. I mean, imagine that. That is a $10 billion buy order that they just got from the XLK. And it is, quote unquote, an extreme example of how even passive index funds can diverge, especially when focusing on narrow slices in the market. Not a lot of people are going to look at the XLK and understand you have 21% of Microsoft, you got 21% of NVIDIA, and you have 5%, 4.5% even of Apple. I mean, I don't know. It's interesting how diversification rules have one rule, which is that stocks with a weighting of 5% can't have a cumulative weight together. But meanwhile, that's not exactly diversification, because if you're buying the XLK, two equities are going to be 42% of that entire index. And meanwhile, Apple, which is arguably the biggest company in the world still, okay, is only going to represent 4.5% of that XLK, which is a little bit distorted when you look at it in that lens, right? All right, let's get back to some of the conversation among rates. They were talking about in the Den, had this article up as well. You got a little bit of Fed speak this morning. You have Federal Reserve Bank of New York President John Williams said the U.S. economy is, quote unquote, moving in the right direction, but declined to say when he would favor an interest rate decrease. He emphasized any decisions regarding the timing or extent of easing policy this year would depend on incoming economic data. Not surprising there. Quote unquote, there are very good signs of supply and demand coming into balance. I do see a disinflationary process continuing, and I expect inflation to keep coming down the second half of this year and next year. All right. Referring to jobs data that have continued to be strong. Despite signs of weakness in figures gathered from households, Williams said payroll reports might be a bit overstated. It's interesting because that's kind of the one number that we had, right? When we got the hot May non-farm payrolls number, everything else has been a little bit weak. And if you're going to see the Fed begin to dismiss that number, then boy, there is definitely a possibility that we have one or even two cuts, because that's the hot number. If you're talking about that the jobs number might be a bit distorted, everything else lines up for a weakening economy right now. Fed officials lowered their outlook for how much they plan to cut this year. According to forecasts, they left the rate at 5.25 to 5.5%. Williams said last month, ample evidence the Fed's current policy setting is weighing on the economy. and he expected inflation to keep cooling. So the most important thing to do is to get the decision right and ignore the politics. Nonetheless, we'll see where we go. But when you talk about ample evidence that the current policy is weighing on the economy, you combine that he thinks the jobs number might be a bit overstated, and then you add all the other inflation numbers and you add retail sales that we've gotten today, might be an interesting one. Goldman, they're looking at 2 cuts, man. U.S. jobs at an inflection point. They stick to the 2-cut call. GDP growth has slowed meaningfully. He says the first quarter inflation jump was likely an aberration, and so they're looking for 2 cuts. They're out there. There's your dot plots. We've all gone over those. Ultimately, the key driver of labor demand is economic activity. Despite the Fed's surprisingly hawkish projections last week, we feel good about our forecast of 2 cuts in September and December. And as we know, man, time flies. It's going to be September before we know it, and we'll see where we go from there. Now, we jump to other components. How about rent? The Journal this morning. Rent hikes loom, posing a threat to inflation fight. Rents in several Northeast, Midwest cities are rising this year. The Fed chair calls housing situation complicated. That's one way to put it, man. Median rent for new U.S. leases on a monthly basis, May 2024, $1,404 is the number right now. Now, I tell you, it is interesting, folks. I have a duplex in South Tampa. Each side is a 2-bedroom, 1-bath. They're renting right now for $21.95 each side, okay? Beautiful property, though, a block from Bayshore. Beautiful South Tampa residence, and it's a grandfather duplex, so you don't get a lot of opportunities to get small duplex units. I think the house, my neighbor just sold his house for something like $1.35 million. Okay, so yes, it's a duplex, but you're living in this beautiful neighborhood, and I tell the tenants there, we got 2 young couples, so they got it made. You know, beautiful area, and you can't really find properties at $21.95 in a neighborhood where you have single family homes selling for $1.3 million, et cetera, right? But what I will tell you is I just got one tenant in there in May, and they're paying $21.95. That's the same rent that I got a year ago for Unit 1. So I got somebody in Unit 2, they're paying $21.95, and I just renewed the lease for the person in Unit 1 at $21.95 a year later without raising it. Because I put up Unit 2 at first, and I just wasn't getting the hits, man. I tried it at $25.95, thinking maybe this market's on fire. You give it a little bit of a try for a week or two. I got nothing. Put it to $23.95 for a few days, didn't get anything too, and just said, we're going 21, and I got a plethora of people at $21.95. So it is always interesting sometimes where $100 to $200, depending on where you are on the curve. But 1404 is quite a number when you think about the number of rental units that, you know, if you're in a condo unit, if you're in an apartment complex, that is the median number is 1404, which is quite a high number across the board. But what is interesting here is, right, is that I am going to have increases coming down the line in a year or two, because now I've signed a lease where it's been stagnant for a year. That'll stay for 2 or 3 years, and then I'll start jacking it up again. And that's going to be on inflation as well. We'll finish this conversation when we get back, folks. We'll take a look at some others. Take a look at Boeing. We'll take a look at some other equities.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? one simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got Boeing down $2.01%. We're going to get to Boeing next. We're going to finish up this conversation, though. It's a couple points I wanted to get to on the rent article. It's a long one out here, and this one's out there from the Journal at about midnight last night. So it's key to consider here, right? They talk about that rents are rising, though, in areas that have not been the Sun Belt, okay? So I'm trying to get these quotes here because there's a bunch of them. Oh, come on. Forgive me. Here we go. While asking rents for new leases nationally are running near flat, okay, over the last year, those figures are heavily influenced by the Sun Belt. That's what I'm talking about, okay? Now, we got tons of houses. I often talked about, I'm in Lakeland right now. The rental property I have is in South Tampa, but in Lakeland, folks, I've talked about that they're building 1,700 unit single family neighborhood homes between Lennar and DR Horton, okay? They had to do multiple builders. It's such a big property, okay, where record high supply has turned rent growth negative in some cities. Now, that's the difference there, right? You have some huge developments in Florida and in the Sun Belt that have brought rent down to a certain degree, okay? The least affordable home sales markets in decades is compelling more renters to stay put. So what's happened is that you now have certain areas outside of the Sun Belt driving some of those rental increases, okay? Milwaukee, 4%, DC, 3%, Kansas City, Missouri, Detroit, Chicago, Boston, Columbus, Ohio, New York, and Philadelphia, all on the positive side. This is median monthly rent for new leases change from a year earlier. And on the negative side, Miami slipping into the negative, some of the hottest areas. Look at Tampa, down 2%. Median monthly rent for new leases year over year. Tampa, yeah, down 2%. There it is. There's the market. So it makes sense. I'm not an anecdotal story, right? As I said, I rented one unit May of 2023 at $21.95. Another unit came up in May of 2024. Couldn't get it above the same price. Rented at $21.95. The one thing I will say is I got a lot of hits at $21.95. Okay, but I did renew that same lease for the people that were in there last year to get them in there again. But guess what? They're great tenants, and that's worth it itself as well. Now, the last part of this, okay? They talk about some of the big landlords, of course. Only 7% of residents at properties owned by Avalon Bay Communities, that's a big owner, left to purchase a home in the first quarter. The long-term average is 16 to 17%. Huge discrepancy, but it makes sense, right? Makes sense. Can't go buy a home right now. Big landlords are increasing rents on renewed leases by about 4% or more. That's in line with recent historical averages. And the part I want to get to here, this one. So in May, Brookfield paid more than $1.5 billion for 7,300 units in the Sunbelt, okay? Mostly in 30-year-old garden apartment complexes. The average rent for those units was about $1,700, all right? Now, they say up here, where is it? You can increase it by about $500 is the difference. Oh, where are we? Come on, here we go. The difference in monthly rent between a middle-tier apartment and a newer luxury tier unit is about $570 on average, okay? Rents in the middle segment have also risen faster than rents in the lower and higher, so the middle's a nice spot. So what do? They go buy 7,300 units in the Sunbelt. They're getting $1,700 a pop, okay? And what are they going to do over the next 5 years? They're going to make some renovations. They're going to raise rents and increase the cash profits by more than 34%. But guess what? You add 570 to 1,700, and what do you get? You get right in that $2,200 to $2,300 range, folks. And that's a nice range. I just told you myself, if you're dealing with nice apartments, nice places, $2,200 is a sweet spot, I think, on the higher end. You start getting higher than that right now, and inflation's going to change things, okay? But my perspective, people can afford, and that's for probably a couple people or somebody doing fairly well, right? I have two young couples in each unit, so you have a couple income streams in there, and for a couple income streams, paying $2,000 to $2,200 a month for a nice home, that's a decent deal right now. And so it's interesting when you see, right? They're going from $1,700, they're going to jack it up, they're going to do some renovations, and they're probably going to raise those rents to $2,200 to $2,300, which is probably a sweet spot right now for a nice unit near the Sunbelt. Nonetheless, rents, they're going to be going up, man. Yeah. Residents in the Northeast aren't so lucky, man. Yeah, two-bedroom unit in Jersey, risen more than 40% since 2018. $3,100 a month. The most recent number, a 9% increase from last year. Good old Jersey, man. Wild. All right, and we got to talk about it. How about the Celtics, man? They get it done. Banner number 18. They take over the Lakers. They blew out the Mavericks last night. I couldn't stay up that late. I almost did. I was in bed. But pretty interesting, these two stars, man. Jason Tatum, Jaylen Brown, they caught a lot of grief over the last couple of years when they couldn't get it done. But nonetheless, and they won it with those two stars, man. You got Jaylen Brown getting the MVP. Probably could have went either way, man. Tatum, he had a low field goal percentage in the finals, but boy, they were the two big ones. Kristaps Porzingis, he was a big star in some of those games. You hit a half-court shot at the buzzer. And they talk about the MVP being math right there. In the NBA Finals, the Mavericks had the best player, but the Celtics wound up with the trophy because the best system won out. And yeah, Luka's quite a player. I was telling my dad about this, man. I mean, anybody who's been watching those highlights, it's pretty interesting to see some of the body language from Luka. And, talk about bias as a Boston fan. I'm about as biased as you can be. Yeah, Drew Holiday. I mean, they and that's where, I think this headline said it. Was it? Yeah, well, this is the one. Yeah, that the best system won out, where it was everybody, man. Al Horford in there with their, veteran driving things out there. And then how about the guy just shooting the half-court shots? What was his name? He hit a couple of them in the series, man. And that probably did it. You had a guy hit a half-court shot to come into halftime, put him up by 20-plus points. Crowd goes bananas, rightfully so, and that was probably the energy that put it away. Right there at the half. And, quite a year. And there they are. So, yeah, Boston, they're going to be celebrating. And I think they got, is it the 21st? What day is the 21st? So Friday, I think, is the duck boat. I saw it out here somewhere. Where's the duck boat? It was in one of these headlines out here. The duck boat, where is it? All right, we'll find it. Because it is. It's going to be Friday morning. They're going to start in front of the TD Garden. And, boy, I've been to a couple of those celebrations, man, really for the Red Sox and then for the Patriots. But if you're in Boston, you got a chance, folks. Check it out because, we've been so lucky. Pritchett, thank you. We've been so lucky who hit that half-court shot, man. And, boy, the energy in that arena, I was jealous when that half-court shot went off. If you get a chance on Friday, man, make it to those duck boat parades because you never know when the next one's going to be. And I wish I was up there myself because I got to get to Tommy. I got to get Tommy to one of those duck boat celebrations for sure. All right, we'll finish up with the market when we get back, folks. We'll talk a little bit of Boeing, as I mentioned, as they're going to be in front of Congress as well. Stay tuned. We'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. And before we do it, I had one of my friends fortunate enough to actually be at the game last night. Check it out. That was the celebration with the confetti after they won. You talk about some energy, man. Some scenes, of course, outside the TD Garden. And I remember, man, being in there, being in my 20s when the Red Sox were getting it done. Just remarkable energy. But, yeah, pretty cool shots of the TD Garden in there, blowing up that confetti as the Celtics win that world champion. Just want to share that one as he was fortunate to be in that building. Now, we get to Boeing. Talk about unfortunate. So the CEO, he's heading for a Senate grilling as a new whistleblower, a new one. He better watch his back. I kid, but boy, some of the memes that go up on social media, man. Boeing, they have a brand problem, and they're going to have a brand problem for some time as these articles just don't stop. New whistleblower alleges company hid bad airplane parts. Yeah, so they got Dave Calhoun, who's going to be out at the end of this year right? It's pretty remarkable that he's actually going to be in for that long when they should just cut and run. Faces the Senate panel over ballooning safety and quality control crisis. Yeah, that's putting it lightly, man. So the Senate subcommittee released whistleblower claims on Tuesday from Boeing employee Sam Mohawk, alleging the company lost track of parts that were damaged or not up to specification. I mean, how does this happen, right? Well, we know how it happens. And you got Boeing down another 1.6% today. You take a look at this thing on a 3-year weekly. You're basically chopping around at these lows of 2023, and what you are coming into is you're just right at this high. You break this 170 area, man, and you are all the way to 120 in a heartbeat, because we did it twice, and that's the only thing holding this up right now. We're at an area of support. We're at an area of resistance that is potentially support. So what is it? We're bumping into. I mean, look at where it is, man. Not a coincidence, right? The 170 to 175 area. That was the highs of 2022 back in August. That's the lows back in October of last year. And it's a dicey area. You put this thing on a monthly, you pull it back, and you can see you trade below this area right now, and you're moving to the lows of 120, and you're at 175, and they have a brand problem, and that's not going away. I mean, there's so many articles now where even media knows you can put Boeing 737 MAX in the headline, and you got clicks for a negative reason. The market, though, no negative there, man. S&P's up by 10. NASDAQ 100 barely in the red. Thanks for tuning in, folks. Stay tuned. We got a man, Basil Chapman, coming up next. Have a great Tuesday. And we're off tomorrow for Juneteenth. We got live programming today, folks. I'll see you on Thursday. Have a great day, everybody.